Yo, yo, yo! Let's go! How you guys doing? Quiet morning! Yeah, quiet morning. It is Columbus Day in America. In Canada, we have a different name for it. We call it Thanksgiving. Happy Thanksgiving, eh? Happy Thanksgiving. So, yes, it is a bank holiday in the United States of America. They take the day off for Columbus Day, but the markets are open, so it's one of those weird things. So the banks are closed. Will that affect Forex? Yeah, because if money's not being wired back and forth, that will impact Forex. But the markets are open, so I don't know. It's one of those weird days. So we'll take a look at that today. We will also go through the calendar. We'll do some technical analysis. I'll answer some of your questions, and I don't know. We'll go from there. What do you think? What do you think? Smell like a plan? Let's go. So let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Thank you for being here at the Forex.Today YouTube community. There are 58 users as we start today. Would you please click the like button while you're here? Hopefully I earned the thumbs up. What else? Please subscribe. Please leave comments on recordings of videos. Treat each other with dignity and respect. Keep your chat clean. This is a professional webinar. You're in my office. This is our profession, so let's keep it professional. If you're a spammer, we're not interested in your crap. And I think that's pretty much it, right? So those are the rules of engagement. Ask questions, get involved, and I will do my best to answer them. If we've never met before, my name is Wayne McDonald. I am a currency trader. I've been trading for pretty close to 20 years. Before that, I was a venture capitalist, and before that, I was a successful entrepreneur. Cool. Right on. There's my life. There's a little few details left out, but anyways, there's my background. So I can answer things technically and fundamentally, so please ask good questions, and I will do my best to give you good answers. I'd like to thank Traders Way for being the sponsor of the Forex.Today YouTube community, a community of, nearly 16,000 foreign exchange traders stationed around the world. That's pretty cool. Traders Way is a broker. You are a trader, so there could be an opportunity for a relationship. And that's all they're asking for, is an opportunity to earn your loyalty and respect. That's all they're asking for. So please visit tradersway.com, download a demo, play some trades, see what you think. And they're going to say, hey, let's hang out. Let Traders Way become the execution partner to your successful Forex trading business. That's why we're all here. I think that's pretty cool. Very nice. So here we are. This is where we are. And where did it go? I'm trying to go here, I guess. All right. But you should be able to see the Forex.Today website. And then I will go to calendar. Okay. Boom. Boom, boom. Okay, what do we got going on in the world today? Import-export data out of China. Does this matter? Well, it does matter because we're talking about money going across the border. It's also, because it's China and such a large exporter, it could be a leading indicator for general global macroeconomic data. Okay, so if China's exporting something, they're importing something else. So in exchange for their export, they receive money. Okay, so therefore, their money goes up in value. Because what happens is if an American buys a laptop from China, China sends the laptop to America, America sends their money to the interbanking system, converts it, so now in the conversion we know you're selling your American currency and you're buying the Chinese currency. So therefore, the value of the Chinese currency goes up and the value of the American currency goes down. Okay? And then China says, well, they don't want their currency to go up. So now they import, by exporting their currency into the interbanking system and buying U.S. dollars to then buy U.S. treasuries. So it's kind of a cycle. And of course, maybe that cycle gets broken one day. We'll see. I can't believe I'm almost out of coffee already. So anyways, we want to see if China is exporting as much as they typically would, or if we're moving in the direction of back to sort of normal levels. Cool. So we are in the middle of the month. Today is, what is it today? The 12th? So when you get to the middle of the month, you start to see inflation data being reported. Okay? So this week you would expect CPI, PPI and CPI. And you see Germany is the first out of the gate here, already doing prices. Okay. So here we are, Tuesday the 13th, middle of the month, and the United States of America CPI. Inflation data. Okay? Of course, I don't expect much, so it shouldn't be that big of a deal. In tomorrow's Asian session, we have Aussie home sales. That's interesting. PPI comes out for the United States on Wednesday. And that's actually more interesting now than CPI because we don't have much headline inflation, so there's nothing really to worry about there. But PPI sees inflation before CPI. And I'd like to see what's going on there and see if that's tiptoeing in the right area. Now, I think you will find that there's inflation not necessarily in these baskets, but I think in smaller baskets. So I was going to have work done on the house not long ago, and I called the guy up because it was a few weeks by the time he gave me the estimate, and I tried to get him to come down in his cost. And anyways, he's like, no, man, the price of, like the lumber, for example, has gone up like very significantly over the, since the worst of COVID. And I think what's happened is the production of lumber went from normal to zero during the height of COVID. And then so whatever supply was out in the world was very quickly dwindled down, and therefore prices would go up. So I'm just wondering if PPI could help us see that, but probably not. The basket's probably too broad. Okay, anyways. So on Wednesday evening / Thursday morning, depending where in the world you are, we have Aussie jobs. The Aussie jobs report. So that's typically a good scalping opportunity. Chinese inflation shouldn't be that big of a deal. Okay. Thursday, way out there, weekly jobless claims, okay, yada, yada, yada. Some central bankers, in particular Bank of Canada, doing their thing, okay. The autumn forecast statement out of the UK seems like something to read. Hey, Gary. And yada, yada, yada. Retail sales on Friday. That should be interesting as well. Yeah, Gary, I was reading about some of the islands in the Eastern Caribbean opening up again. One of them is Nevis and St. Kitts. And they're like, yeah, on October 31st, I could visit Nevis, but I have to quarantine myself by the swimming pool at the Four Seasons. What? I can't go see the monkeys? I can't do a moped tour? I thought it was interesting, though, like, my choice on Nevis was the Four Seasons. Nowhere else. I'm like, oh, that's really cool. $1,000 a night. That's really fair. There's some other really nice. So I stayed at the Four Seasons, and I wasn't that amazed by it. I probably want to stay somewhere else next time. And anyways, and we were talking about this a few weeks ago. I asked, hey, where would we hold if we're in St. Lucia? Where would we hold a Forex conference? And I think you said, was it Sandals? Anyways, I was reading about them now. If you book at Sandals, wherever they are, I don't know where, I think there's one on St. Lucia. But if you book with them right now, they're offering free extended health insurance. So if you get COVID or have COVID, like you show up and you're fine and then you're there and all of a sudden you get sick and you have COVID, you're at Sandals. They'll medevac you to a hospital. They'll pay up to like a week of food and room and board and all that kind of stuff. It's pretty interesting. It's pretty interesting that they're doing that to get people to come in. I'm just wondering, I mean, if they can get people to come in, obviously that's going to be good for the Eastern Caribbean economy. And then I think they should ban all cruise ships of more than 300 people. Oh, right on. So it was Sandals. Yeah, so I thought it was very interesting because I think what they were saying is if you book your stay this year, but you show up next year, because, you know, we're still in hurricane season. If you book this year, but even if you're not even going to show up till April or something, you get all that free insurance. And it was very extensive, so it was very good, good quality insurance. I thought it was very interesting on the marketing aspect. And I thought, good for them. Because a lot of people might say, well, you know, we'll wait for the vaccine and then we'll travel. So now they're saying, well, if you think there's going to be a vaccine before your vacation in April. Book right now, and even if there isn't, you'll have full medical insurance. And if we have to, medevac you off the island, or if you get quarantined, everything's taken care of. Like, oh, smart. All right, so there is that. So, let's do a quick scan here. Only headline. CPI, which isn't that big of a deal. Unemployment rate in Great Britain. Aussie jobs report. I'd say probably I don't think CPI is that big of a deal right now. We just don't have any inflation. It's not what we're worried about. But I think Aussie jobs will be interesting. That's a direct impact on their economy. And I'd pay attention maybe just for fun, just to impress really good-looking people. You should review the Chinese import-export data and bring it up in conversation. You're like, oh, speaking about the NBA, did you see the Chinese import-export data recently? They're like, whoa, this has nothing to do with the NBA. Oh, I know. Yeah, but... All right, so there's that. Seems like it'll be all right week. I think it'll just be, conducive for waiting for the election. So there's different ways you can review market conditions. You should always remind yourself of sort of where we've been, where we're going, like a Forrest Gump analysis. And it seems since, the last few weeks, last month or so, it's been reasonably up. And there's two things. One, this doesn't predict further up, but that's where the trend is. That's the slope of the mean. And 1 and 2 standard deviations above and below the mean. So all that's telling you is it's been more up. It doesn't tell you about the future. It just tells you it's been up. So if you were a bull, you'd have to put that together and say, well, it was up, and I believe it'll continue up. So it should go up. Now, what day does it tend to go up? It looks like a Monday. Looks like a Monday. What day is it today? Okay. Now, what's the other process here? What else would you want to see if you were a bull? Well, we kicked off the beginning of the month at the M2. Okay? Which means the central should be the next one. Okay? And now on a weekly swing plan, you have plan A or plan B. Plan B puts you out... Oh, wrong one. Hang on. Hang on, Bubba. Plan B is here. Plan B is really outside of 1 standard deviation from the current mean. Doesn't mean it can't dip down and pop back up. It could, but it's less desirable. Like, you wouldn't ask for it to break out and then resume trend. So I think right now, if you were a bull and you're still a bull and you think the future is bullish, this 124.5 is a pretty reasonable area to consider buying. What do you think? Smells good? Smells like a plan? So again, none of that is predicting up. None of that isn't like, oh, you should buy. No, if you're a bull, those are the facts, and now you make a decision. Okay, the chart doesn't tell you anything. You're the one that makes the decisions, not the chart. So your decision right now is, will this continue? And you don't even really care about the upper bound here because that's not in play. So you're deciding now if the week is going to look like that. What do you think? Daniel took it. Would you think it's aggressive? 21.55 on a... Well, so you're trading a market on a time frame where a market doesn't exist. But you can do it that way, Daniel. But 21.55 represents the market, but there's no market on a 1 minute chart. It's all price. But yeah, you could do it that way, sure. Okay.
We're about 10 minutes here to the bottom of the 8 o'clock hour at 8:30 Eastern Time. Again, there is no data expected this morning due to the government holiday here in the States. It's going to be a relatively quiet day with most of Washington, D.C. closed and the banks.
No, it's just fine. And just, it's not quite what I would do, but it's fine. It doesn't matter.
Interest rates across Europe are lower, still being led by strength in the 10-year BTP. Italian 10-year yield is below 70 basis points, and the spread to Europe has narrowed to its closest level in the last 2 years.
Well, Daniel, compare your 21.55 on a 1 minute to a 5.8 on a 5 minute. Canadian Thanksgiving, Ronnie. Canadian Thanksgiving, eh? Yeah, we're getting, this COVID has been around a while now, and now we're getting close to the holiday season, and, Grandma and Grandpa have to isolate for Thanksgiving, and Grandma and Grandpa's going to have to isolate for Christmas. It's going to be a different holiday season, huh? Oh, thank you, Raymond. Yeah, I was wondering about that, dude, Raymond, so... Do 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 do. Alrighty. That's interesting, Jim. Or that's the rule? So what do you think? Huh? So Daniel is saying, do you prefer a 5.8 or 21.55? You could do a 5.8 here. Let's mark this. 5.8 on a 5 versus a 21.55 on a 1. And you'll see that there's not a dramatic difference. Okay. Man, I'm going to need to take another coffee break. Load up on some. I have this process now. Latte, coffee, cappuccino. It's like the perfect mix. Bird, bow, bow, wow, 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 wow. Kicked off beautifully here. Yeah, can we do the czar today? Sure. Just want to make sure you guys got your eyes on the prize.
Singapore Central Bank Governor Menon saying scarring of the economy is quite real. Singapore Central Bank Governor commenting ahead of a semi-annual rate decision tomorrow.
Okay, just want to make sure you got your eyes on the prize. What else is going on in the world of yen? Beast is a little elevated still. Kiwi, not as bullish, but the price is fine. CAD waiting. CAD's just waiting. Okay. And Aussie's still a little overpriced. But again, the right price is pretty close. I mean, dude. You're like, oh, well, I don't want to buy it at 76, but I'd buy it at 75.93. Like, really? Cool. Okay, I have a question for about the exotics, so I can go in there. Another straightforward selling opportunity. Just day after day after day. Easy peasy lemon squeezy. Okay. Radon says really not a great week to trade. Well, there's no news in the way, and there are setups. Right? Look at all these day trades. Day trade, day trade, day trade. So the trades are there. I mean, just hopefully there's no excitement. There's always going to be some level of excitement, but okay. So what do we got here, huh? What do we got here? Okay. Actually, let me adjust this. Let's look at weekly. Okay. Yeah. Yeah, I need some sort of play off the 21 before I get all excited. Well, Rado, maybe that has something to do with the banking holiday today. What do you think? Yeah, but it doesn't mean you can't trade. If you got the shot, if you got the setup that you're looking for, take the shot. So I'm worried about the double bottom play. Now, if we had gone lower and then bounced up, I wouldn't be as, cautious. But, yeah, that's a problem. Okay. So I'd like to wait a little bit. Thank you, Roger. You too. Oh, I'm sorry. These are monthly. My bad. For some reason, they reminded me of the day trades. See, look, it just reminded me of the day trades. Anyways, sell, 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 sell. Right? If you're already a bear, you'd be in on that, right? CJ says, Wayne, how heavily does currency strength, you mean like relative strength, factor into day trades? Well, it would especially affect day trades. If the pound happens to be strong today, is that relevant to today's trading? Yeah, for sure. But like, think of it this way. Think of it, okay, what's impacting the Great British Pound right now more than anything? And we'll talk about the difference between, well, let's just do with it. Brexit, okay. And Brexit isn't necessarily a fundamental trade. We're not talking about global macroeconomics. This is a negotiation between the EU and the Great British, the Great British. But it's a headline by headline scenario, isn't it? So the news, like a pebble in a pond, creates waves. Okay? It's a storm, creating waves. But what are we most interested in when we study fundamentals? We're most interested in the current, the natural flow and movement of water, or in this case, money. Now, there can be waves out there, and they could be based on a news release, like an economic report. It could be an exogenous shock, like a terrorist attack. It can be weather related. It could be headline related, like in this case, the British are not going to do the Brexit thing with the Europeans, whatever. And you get these waves. And that's right on the small time frame that can make the pound strong today, or it can make make the pound weak today. Okay? Strong, weak, strong, weak. These are waves. Okay? So the question is, does the relative strength impact day trading? Yeah, the wave for sure. Okay? The wave for sure would impact market conditions today. But maybe in general, right, once the storm calms down, for example, the current is still the current. The trade winds are still the trade winds. Okay? And so when we study macroeconomics, we're trying to figure out the current and be able to invest along with the current, not necessarily the wave. So when I have these scans, what I'm looking at is based on other pound-related currencies, the pound-related currency pairs, is the pound strong today or is the pound weak today? But that's relative strength. That's just the pound versus something today. And to get that, you have to look at past data. See, fundamentals are not looking at past data. They're looking at future. They're looking at the future. So when you analyze, like if you're Thor Heyerdahl, and you say, if you build a raft in Ecuador, you're going to end up in French Polynesia. Now, he's not predicting the size of the waves of the water and the pattern of storms that are going to occur over a 120-day period. But he is saying, if you throw this raft out there, I'm going to catch a current, and it's going to carry me 5,800 miles to the other side of the ocean. And I'm going to land in a certain spot. Okay? So, right? So looking at this says, well, based on what's happened over the last couple of days, the last few hours, the last couple of weeks, whatever time period you're measuring, you expect a certain amount of waves. Okay? What I'm trying to do typically is, instead of doing a relative strength exercise, and let me say it in a different fashion, you could do it this way and say, based on current market conditions or recent past market conditions, pound dollar, you should buy pound dollar. Okay? But that's very specific to what has happened in the recent past. But it doesn't tell you where we're going to be next year, does it? But it might tell you what might happen today. And the question was, does the relative strength impact day trading? Yeah, it could be choppy today. Or right, it might be smooth sailing today, but it doesn't tell you about next week, next month, next year. And the fundamentals tell me things like, Wayne, you should be a bear on the US dollar for the next 5 years. That's a current. That's a long-term, fundamental, macroeconomic-based trend. But that doesn't tell me whether I should buy pound dollar today or not. Okay? So now you have to take sort of these two things and put them together. Ooh, look at that. I missed it by the spread. You son of a... Oh my God, you're killing me. Oh, you stupid son of a... Oh my God, I missed it by the spread. Looks like I'm going to have some work to do today. Good job, Daniel. So I want to make one more comment to CJ. Eventually, you're going to need to know both the waves and the current. You can't be a sailor and not understand how to handle a storm. But you also, and you can't be a sailor and not understand. That was my mouse. I just dropped my mouse. How did that happen? You can't be a sailor and not understand the trade winds or the trade currents.
You're listening to Trade the News.
Okay? You need to know these things. And then be able to handle both. You can say, okay, well, we're on course right now. We're moving with the current. At 8 knots, we should get there in such and such a day, right? In 22 days, we should arrive. But then you have to deal with the wind every day. Sometimes there's lots of wind. Sometimes there's no wind. Sometimes there's a crosswind. Sometimes there's a headwind. Sometimes there's a tailwind. And you're adjusting course all the long, right? So CJ, you have to know how to tack. Right? That was weird. So you're going to need to know how to tack, but you're also going to need, no, I don't know. I mean, all of it, right? I mean, just you need to know how to adjust. Stay on course. So your course, for those that know how to sail, right? Your course might be, we're going to go from here to here, right? We're going to go from A to B. You want to end up at B, but you also know what? To deal with wind, it might look like this is the actual route you take. But what else could happen? A to B. So you're in the Bahamas. Okay? And you want to land in Florida. In West Palm Beach. Palm Beach! No, you want Palm Beach, right? Okay, you want to land at Palm Beach. What's the problem? Well, Florida, let's put the tip of Florida like this. I know that's not quite right. Well, wait, it's way wrong. No, that won't work. What am I trying to say? What if you're trying to go from here to here, but the current is this way? So if you point here, you're not going to end up there, are you? Right, I'd rather fly planes than pilot a boat. Well, a friend of mine lands airplanes on boats. At least he used to. Yeah, so you have to be able to work with all of this, right? Yeah, well, this is so this might be like sailing, this might be like flying an airplane, but it's also like trading. So you have you have your day trades, but then you have your your macro fundamental based trades. And so some people, when they start, they only focus on the short term, spot trading, scalping, maybe day trading, and they forget where they are in that process. They're not even looking at the current. Okay? So if the wind blows just right, they'll make money today. If the wind doesn't blow exactly right, then they don't make money today. And they're wondering, and it's because, well, you're fighting the current and all this kind of stuff. And sometimes the wind helps you, sometimes it doesn't. And your results are very inconsistent. You might have proper tactics, but you're missing the boat. Oh, look at I hate when that happens. Look at this. I made a bad decision. Anyways, you'll figure it out. Is that right, Reb? So Reb's actually done the trip that I just drew, and the current, right, Reb? The current between Florida and the Bahamas is unbelievably strong. And when you see the current in that area, the shape of the land and the shape of the sea makes total sense. You're like, oh my God, that's the current goes under there around the Grand Caymans and then smashes into the still dead water of the Gulf of Mexico and then poof, gets pushed around, then whoa, right, runs into Cuba and then has to go way back up and then hits this cold area of the Atlantic, so then shoots straight up the side of Florida. So they say, like, for example, when a plane crashes off the coast of Florida, you don't look at where it crashes. You go north about, 10 miles. Because the current is going north so unbelievably fast. It's crazy. Yeah. So anyways, you need to, I think I've made my waves versus current. Did anybody actually enjoy the waves versus current discussion, or was that silly? Yeah, Daniel, that's a great one. Yeah. Okay. All right. All right, good. Good. All right. So, what current have I predicted for, let's say, Noki? What current? What's the current on this? For this pair? Yeah. Yeah, Highlander. Yeah. I think the current is taking this south. Does this mean you sell every day? No, but you look to. Okay. So you could frame this any way you want. And like I was saying to Daniel, whether you trade a 21.55 or on a 1 or a 5.8 on a 5 or whatever, everything is correct. You're correct either way. But like, let's take a look at this from different ways. Let's say here. Okay. Okay. In that price zone, I would sell and be short for at least a month. Ideally longer than a month. So do I really care what happens today? Not really. Okay. That's it. Okay. And the rest now is like price action and other trading strategies. So you know this is a front run, okay, if you were already a bear. And then the lowest low, you drag it across, there's your new sell zone, right? And here's one here. You'll say, well, that didn't work out perfectly. Oh, I know, it's terrible. Oh, that's just terrible. It didn't work out perfectly. But they are suggestions, okay, but whatever. So drag that across. And then you drag this across. It's just price action, okay? And what you're generally expecting, now you're going to have waves and storms and good weather and bad weather along the way, but what you're expecting over the period of time is that the current will carry you south. Maybe not straight south, but it's going to take you south. Reb says, I still can't figure out the exact day you enter a trade. You want to, I mean, look, if you're a full-time trader, you got your charts open all the time. So, actually, I'm trying to actually answer that question now, though, Reb. Okay, so this is a monthly play, right? So let's talk about this, Reb. On a monthly play, most likely, I'm going to trade at the end of the month or the beginning of the month?
It's nowhere through the bid deadline for the weekly French bill auction. They'll look to sell up to 5.3 billion in 3 tranches of bills. We should see the results before the top of the hour. Then we'll get some Russian data as well. We'll get the August trade data for Russia at the top of the hour. There's previews both timestamp 40 minutes past the current.
Okay, I'll just ignore him. All right. When I'm like position trading, I almost always sell. I mean, I would close to always. I can't say always, but nearly always, or at least I would always plan to enter my trade in the last few days of the month or the first few days of the month. Okay? And that's that. Straight out of the training courses, by the way. Okay? So all of that's there. Cool. So now let's go to a smaller time frame. Okay? And you incorporate this. Okay? So, when it comes to weekly, again, typically, the reason I meet with my swing trading group on Thursdays is very often the trade is on a Thursday or a Friday. Not the swing for that week, the swing for the future week. And the reason this hit and rallied up is that's almost certainly a target. So let me try to incorporate that. Okay, see? So on a weekly basis, okay, we have this sell on a Thursday and target this zone. Okay? You can see we hit the target on a Tuesday. What do we expect to happen if you hit your target on a Tuesday? Is anyone here taking the course? What happens if you hit your target on a Tuesday? Counter trend. Yeah, crazy, right? That you know this? So you're like, oh yeah, it's going to do this. Yeah, well, it did do that. Yeah, it's not even fair that you're trading this against people. I don't know why people fight. Why do people want to do it the hard way? So anyways, here's your Thursday in, here's your Tuesday out. Okay? So whatever. And here we are in the new week, somewhere in the last couple of days or the first few days of this week, you'll want to trade it. Okay? If you're a bear, you're looking for that, although it's not a good setup if you're a bear, but you still might have to do it. If you're a bull, which I am not, because my analysis tells me in, let's say, 5 years, in 3 years, in 5 months, USD Nokia will probably be down. So I'm not looking at it from a bullish point of view, but I know, I'm not a fool. I know bulls are looking at this and they're going to buy. So I'll have to make judgment calls, just like you're sailing and you're watching the knots and you're like, okay, we're moving 8 knots, but we're pulling we got 13 knot winds and my sails can only hold 15 knots, or at least this one particular sail should come down as we approach 15. Also, we're trying to navigate over here and the wind is blowing us there and the current is taking us somewhere else. And you have all these variables and you have to decide, what do I do? Oh, the sound is bad, guys? Is it really? Oh, okay. Yeah, all right. So you'll have to decide what to do. And do you understand that every sailor would make slightly different decisions? One might leave the sail up, one might leave the sail down, one might tack this way, the other one might tack that way. Okay. So in this case, I look at it, say, ooh, I have some risk. Does that mean the current is going to change? Not likely. Okay. So what do I know about this? Well, if I'm trading the current, I will sell something like this. I will not buy it. And if we get above this area, above here is a giant question mark. I don't expect to be up there. If I expected it to be up there, I'd be a bull. I'm not a bull. So I'm not going to sell now. I might sell later, and I have a couple of prices in mind. And if we get above those prices, I'm not interested. See how easy it is? Well, it's not easy, but you see how clear it is? I'll sell at 9.2 or 9.25. Those are my prices. Okay? Now, that's not a tactic. Both of those are strategies. So now tactically, and this goes into, like Daniel's question earlier, 21.55 on a 1 minute or 5.8 on a 5-minute, or what's the right entry? What's the right time frame? What's the right combination of moving averages? I don't even care. What's the right pattern? I honestly don't care. Okay? What we care about is your technical analysis at these prices. So could you wait for a 5.8 cross here? Yeah. 21.55 cross here? Yeah. What about a candlestick pattern? Yeah, that works. What about what if it does this? How about this, Wayne? Riddle me this. You get, Wayne, you get a candle. So let me have a candle here. Okay. Wayne, you get a candle, and then you get a candle, and then you get a candle, and then you get a candle. Okay. And then you get a candle, and then you get a candle, and then you get this candle. Oops. What do? Well, okay, well, this is on a 5-minute. Well, if it were me on a 5-minute, the way I'd probably handle this is like that. I'd be short here and stop here and done. Is it the 5.8 cross? Yeah, maybe. Is it the 21.55 cross? Sure. How about the 13.22? Yeah, that's fine. How about the 4.16 cross? Yeah. Okay. How about a bearish engulfing candle and you sell a 50% rally on that? Yeah. What's the most important thing here? That you've identified that this is the price you want to sell. How you actually do it, I don't really care. The bigger the time frame, or the slower the moving averages, or the more levels of confirmation that you have, the farther away from the actual price. So someone might sell here, and you might sell here, and someone else sells here, and someone else sells here. Not on the way up, but on the way down. Which one is correct? Well, they're all correct, but the later sells might have to do because they're on a 15-minute chart and you're on a 5-minute chart. Or that someone has 3 levels of confirmation versus 1. Is it any safer? Well, the problem is if you sell way down here, your stop's going to be here. But if you sell here, your stop's going to be here. If you sell here, your stop's going to be here. And if you sell here, your stop your stop is always going to be in the same place. So the quote unquote aggressive trade, the one made on the 5-minute chart, is actually the one risking the least amount of pips. It might be, let's say, 20 pips, where this one down here might be 35 pips. Same trade, same strategy, same stop, different entry price. Which one's right? Oh, they're all right. But for you to catch the first one, you have to be ready, willing, and able, hot to go, HOTTOGO, on a short time frame. Like you're there when it happens. And someone else might not do it that way. They might be on a different time frame, not a 5, but a 15. That's cool. It's not wrong. On says, so be aggressive. Well, but you're going to have less levels of confirmation. Now, what a lot of people do on when we talk about aggressiveness is they do this, sell. Well, that's not aggressive. That's not doing the job. You're supposed to have, right, more than strategy, but you have to have tactics. Okay? It's not that you got the price right, that it reversed at your right price. Okay? If you observe a reversal in the direction of your trend at the exact price you expected, then that's when you should trade, when market conditions are favorable. Okay? And of course, if it does this now, you'd look to do your second area of interest is up here. Now you'll say, well, this green area down here might have sucked a bear into a trade, right? Yeah. On a 5-minute chart, for sure. On a 15, maybe not. On an hourly, definitely not. Okay? So your aggressiveness means you're going to have lots of negative 20 pip trades. But you have lots of trades, right? So you should, your minimum winner should be what, 100 pips on a trade? Okay? And you'll see the secret sauce is that you stop taking your pissy little 30 pip winners. Guaranteed poverty. Okay? Rookie Trader says some people use higher leverage for fewer pips. Yeah, guaranteed poverty. That's where bankruptcy lives. Man, I need a coffee. Let's take a quick coffee break. And then what we'll do after that is I can take a few more requests and cover currency pairs that you want me to cover, answer any of your questions. So maybe now you might want to pop in like what currency pairs you want me to cover, and I'll do my best to answer them. So let's just take a 3-minute break, and I'll reload on my coffee, and then we'll come back and we'll finish up the third half of this presentation. Wow, wow, wow. Cappuccino, cappuccino. All right. Oh, wrong one. Yeah, so I think what holds most people back is they don't plan tomorrow's trades. So if I was your boss, I should be able to say, come into my office right now and bring tomorrow's trade plans. Okay? And I don't think most people do it. I think you're just caught in today. You're looking around. What's going on today? There's lots of noise. There's lots going on. Should I be buying this? Should I be selling that? And you've already lost, and I don't know why you do it. I just don't understand why you do it that way. I should say, bring me tomorrow's prices. What are you going to sell tomorrow? Okay? Okay? That's what it is. So if you were telling me that your trade plan was to sell USD Noki, you would have done it. If you're not sure what you're going to do, you're never going to be on time. You're always going to be late. And you're always going to trade yesterday's trend. But that doesn't, you're just drowning in the waves. Okay, anyways. So if I were a bear on Noki, today's prices are here. Because that's tomorrow's prices. Now, it doesn't mean it's a good trade per se. Those are just the prices. I still have these bigger views. Okay? Yeah, Gary, before Ray lost his mind, yeah, it makes sense. Yeah, what he does makes sense. That's all I'm saying. I think he's lost his mind over the last 5 years. I think he's a nutcase billionaire. Sort of like Larry Ellison. He plans on living to be 200 years old. He lives in a Japanese village in California, of course. So he bought a Japanese village, had it dismantled and reassembled on a beautiful property in the hills near Oracle, not far from my old house. And he lived in there, and he even brought people in and gardens and stuff. And he's going to live to 200, so he has 1 or 2 enemas every single day. And he has like 47 people reporting to him because he's the boss and he knows everything, and he's the all powerful. And you're like, oh my God, he's a nutcase. Yeah, nutcase billionaire. So I think Ray is approaching that. Ray Dalio is approaching that. But let me tell you, if you start making a few billion a year, yeah, maybe you want to live to be 200. I get that. Yeah, of course. No. Yeah, but it's funny though, like when people say things like that, Daniel, like when Ray Dalio's macro approach, like, there's too much Ray Dalio in that. I mean, you either do analysis or you don't do analysis. Ray Dalio did not invent anything. Yes, when the price of chicken feed goes up, the price of chickens go up. Yeah, no kidding. What a shocker. Right? So yeah, actually doing the work and having some logic behind it totally makes sense. And right? Like and to me it's shocking that people don't do this. So 2 weeks ago, or a week and a half ago, when I did Off the Charts with Wayne McDonald at the FX Bootcamp YouTube channel, I read 2 articles about gold out of Barron's magazine by professional managers of gold. And they discussed why gold prices were up. And in my humble opinion, they were wrong. Now, the process of which they put things together, like inflation up, gold up, or some other effect. Yes, that is true. That's what it says in the textbook. It is true. But what they were wrong, and by the way, these are very wealthy, very successful people that manage very large amounts of money. And I still think they're wrong. And I'm not trying to be the arrogant one, although I obviously sound like I am. But I just don't think they fully get it. And whether they fully get it or not doesn't determine how much money they make. How good are they at sales? How good are they at marketing? What firm do they work for? They might just be the gold dude at some firm that manages $100 billion and they throw a few $100 million his way and now he manages $800 million or maybe $2.2 billion, which for the firm might be small. And they're making all these assumptions. And at his school, they said if inflation is up, then gold will go up. And then he sees the Fed do something or changes their expectation for future inflation, and they see gold goes up 40%, and they're like, oh, it must be because of this thing. That in of itself, the logic might be true, but in reality, in that scenario, it's incorrect. Okay. And I think Ray would be smart enough to know that. So I would give Ray credit for him doing the job, understanding cause and effect. But to me, that's what macroeconomics is. Okay. Now, if you think when the Fed says they're going to let inflation go from 2% to maybe 2.5% before they raise interest rates, and you think that makes gold go up 40%, there's truly a disconnect. That the Fed's going to allow inflation go 0.5% higher, so therefore gold's going to rally 40%. You're like, wait, this dude that manages billions of dollars in gold doesn't understand central banks? We're buying precious metals to put on their balance sheet so that they can devalue their currency? Oh, well, he's not a currency guy. He's a gold guy. He doesn't know anything about central banks. He doesn't know anything about cash. He doesn't follow global trade competitiveness, like China and India competing with each other and using currency to do it. That's outside the scope of what this gold dude does. And that's why I say to you guys, you might not be making millions of dollars right now. You might not be managing billions of dollars. But I think you can be a lot smarter than those that are. And that you're the next generation to replace these guys that don't quite get it. Because when you do enter the market as a young emerging manager, you will be better equipped to make more logical, intelligent decisions. And it won't take long for clients to come your way. because you will, I think, be more competitive. You will have a clearer picture. And so like that, I think, so the Ray Dalio macro method, like, dude, it's simple logic, right? So yes, Ray Dalio is someone I respect who has done that. But now take Ray Dalio out of it and just think you need to understand. You should be the one to say, wait. Gold did not go up 40% because of what the Fed said about allowing inflation to be a little bit flexible and that they'll let it go to 2.5%. Dude, gold goes up 40% when we expect inflation to be at 9%. We're expecting it to go from 2 to 2.5, bro, and we're probably not even going to hit that. We haven't had inflation for 25 years. Don't tell me gold went up 40%, bro, because of that. You must be deranged. Let me tell you why gold went up 40%. Central banks were crushed by the COVID collapse of the global economy, which increases the value of currencies from exporting nations, further crushing their economy. The logical, intelligent, expected reaction of a central bank for a country, let's say like India, will be to devalue their currency, and they do that by buying precious metals. Gold didn't go up 40% because the Fed said they were going to be a little bit loosey-goosey on the inflation target to not make it a hard target at 2, but maybe allow it to go to 2.5, God forbid 3%. It's insane to think gold would go up 40%. But if you track the purchases of the Central Bank of India, you will see that they loaded the boat on precious metals, gold and silver. They also loaded the boat on foreign currencies and foreign bonds like U.S. treasuries, all of which devalued the rupee to make them more competitive. So when you think about every central bank around the world, in particular ones that are exporting nations, China, India, Brazil are great examples. I think you'll find that they bought up a boatload of gold to put on their balance sheets, not because they're afraid of the Fed going from 2 to 2.5 on their inflation targeting, but instead to devalue their currency. Oh, well, I don't do currencies over here. I just do gold. Well, son of a biatch. Okay? You're on like a higher level than these guys that are making $1 million a month salary because they manage $3 billion worth of gold and they don't even get it. You don't even have to be that good. You just have to have the right daddy and the right degree. Oh yeah, Maurice wants to know Okay, Maurice wants to say, how does that devalue the currency? I can answer this in less than 5 minutes. So let's go blank here. Cool. So, India, one of my favorite countries in the world, India. All right, they have a balance sheet, okay? So how about this? They have some gold and they have some cash. Actually, it wouldn't be this way. I'm thinking of a bank. Sorry, it wouldn't be this way. Sorry. And let me make this a little thinner. All right, so on the balance sheet, you have assets and you have liabilities. So my balance sheet was a commercial bank sheet. Okay, so this is a central bank now. So you're going to have cash and you're going to have gold, let's say. Those are the two things on your central bank balance sheet under assets, okay? Makes sense, right? Liabilities would be cash that is made by bank deposits because of your fractional reserve banking system. So the cash can be an asset and a liability, but let's just say this is assets, okay? So what happens if you buy more gold? So you go into the interbanking system Okay? This is important because you need to exchange your cash, your foreign currency, for, let's say, Canadian dollars. You're buying your gold from Canada. Okay? All right, so let's track this money flow. Okay? You want to buy some gold from Canada. So you take your cash, you filter it through the interbanking system to buy CAD. Then you have CAD, so you buy gold, and then you put the gold on your balance sheet. Okay? Your cash went down by $1 billion in cash, but now you have $1 billion more in gold. So has your assets changed at your central bank? You took, okay, $1 billion Canadian dollars worth of gold, not American dollars, not Aussie dollars, okay? So what did you need to do this? Well, you had to take enough of your cash, put it into the interbanking system, get matched and convert to change that into Canadian dollars. So you need $1 billion, you need whatever number of your currency, because if it's 9-to-1, you need 9 billion of your cash to convert to 1 billion of Canadian dollars to buy $1 billion worth of Canadian gold, or 9 billion of whatever your currency is, or in this case, India rupee. So if it was 9-to-1, let's say, you would need 9 billion Indian rupee to buy, right, worth of gold, but you have to convert that to 1 billion in Canadian dollars to get the gold, transfer it over. So your cash went down by 9 billion rupees, but your gold went up by 9 billion rupees, and your assets still balance. So what's the missing thing here? There's less gold in the world, or at least less gold in Canada. There's less Canadian dollar. Why? You demanded $1 billion Canadian dollars. There's $1 billion less Canadian dollars floating around in the interbanking system. But what is there more of in the interbanking system? There's 9 billion more Indian rupee in the interbanking system. 9 billion more in the interbanking system. There's less gold, so gold went up. There's less CAD, so CAD went up, but there's 9 billion more rupee than there used to be. So let's take a look at this. The quantity and the price, we'll call it, okay? And the value of a rupee. I don't even know if that's the rupee. All right. So you have demand. All right, there's your demand curve, and you have supply. Okay? And the reason it's vertical is there's that number, that quantity of Indian rupee in the interbanking system. Okay? So we'll just make up numbers. There's 1, 2, 3, 4, 5, whatever, billion, trillion, whatever. 1, 2, 3, 4, 5. And what are these numbers? It's just the purchasing power. It could be like number of apples 1 rupee would buy. So, whatever. Okay? You just focus on quantity and value, if you will. Okay? So we know the 9 billion more rupee was put into the interbanking system. So that means we have to shift this to a higher quantity. So it was this number, we'll shift it over to that number, whatever. Okay? So supply 2. So there's more. And all this is indicating is it went from this number to that number, which is a larger number. The quantity of rupee in the interbanking system went up. Well, let's analyze this. The original equilibrium point was here. The new equilibrium point is here, and you can see the purchasing power of the currency went down. Now, let's go all the way back to the idiot managing $1 billion, making $1 million a month salary, and he don't get it none. The central bank did this on purpose. The Central Bank of India said, oh my God, look at what COVID is doing. It's driving up the value of the rupee because Indians are bringing money home to India because they're out of work and they're locked up in their apartments and they need cash because they need to buy food and all that. And if you don't have a job, or if you're rich and people stop paying you rent and your factories are not being productive, and all of a sudden you need cash. The demand for cash actually goes up. Okay? The demand for cash goes up. What happens when the demand of cash goes up? Okay? If demand shifts to D2, and we're still on the old equilibrium, oops, that one I needed to keep. Okay? Check this out. Demand went up because now you're a billionaire and people stop paying you rent. You have to keep your factory open. You have to keep, right? And you have to keep some of your employees employed. So you're like, oh my God. So you bring money that you've invested overseas, you bring it home because now you need cash. You don't want to lay people off, but you've lost a lot. Like if you're a small business owner during COVID, oh my God, right? Like you own a restaurant and your revenue went down by 80%, but you got to keep the restaurant open, and you got to try to like make money on Uber Eats and Dash and all this kind of stuff. You're like, I need to find a way to keep open because you have to pay your rent or pay your mortgage. You got to pay your insurance. You got to keep the electrical bill going. Like you got to like, oh my God. So now you got to, right? Your demand for cash is still there because you have so many fixed costs. If you have a factory, for example, oh my God, right? So all of a sudden your demand for cash goes up, okay? And look what happens to the price. Because demand for cash went up. This is what happened when COVID first hit. Demand for cash went up. Watch what happens the next time Japan is hit by a major earthquake. I predict it will happen again. Sorry, Japan. Watch what happens to the Japanese yen minutes after a major earthquake is reported in Japan. Watch. The Japanese yen will strengthen. Why? Risk off? Well, you might think that. But really what it is if you've just lost your home and your neighborhood's in a disaster or your family is in strife, you need cash. You need cash to rebuild your house. You need cash to repair your house. You need cash because you might not be able to work for a few weeks. You're going to need cash. Cash demand goes up. When the demand goes up, the value goes up. So when you're like India now, or Japan with a strong currency, and you have to compete with China, and China has an artificially weak currency, now all your products are way more expensive compared to the Chinese products. Holy crapola. As a central banker, you have to do something for that. So what these gold traders don't understand, but what Ray Dalio did understand, is the demand and supply of money. So all of a sudden, India's like, holy crap, our whole economy just got shut down because of COVID-19. Everything around the world is shut down. Exogenous shock, by the way. The consequence of that is the Indian rupee skyrocketed. So the central bank now says, we have to stop this. And if you understand how to trade like a central banker, you say, I know how to change this. I know how to change the value of the rupee to going up to going down. And you also understand, since you know how they do it, they simply go out and buy gold. Why? Why would you buy gold? Because it's not M1, but you might be able to call it M2. So you're just converting your cash into a hard asset. But your balance sheet hasn't changed at all, but you did lower the value of your currency. drop the mic, walk off stage. So if you attend these meetings at Off the Charts with Wayne McDonald, it's at youtube.com/FXBootcamp. We cover things like that. And so, yeah, to me, it's, I wouldn't call, I mean, Ray Dalio knew his stuff. And to me, it's almost like basic required knowledge. What I think is more interesting news is the fact that there are people managing billions of dollars that have half the knowledge that you do. That you are on a glide path to creating better value to those people's clients. You are well on your way to being better. A better trader, a better investor, a better analyst, right? And those guys that are sitting on their cushy jobs spend more time whining and dining their clients than actually doing the analysis. They're dinosaurs. Dare I say boomers. Goodbye, boomer. Okay, boomer. Okay? So you're well on your way to replace them. They're obsolete. Okay? They're obsolete. So if Ray Dalio is a genius because he thinks chicken, the price of chicken feed indicates the price of a chicken, you're like, yeah, input costs, dude. How do you price the value of a car? Well, add up all the costs, add a little bit of profit margin so the company can stay afloat, and that's how you value a car. How do you value a chicken? Well, how much food did it eat during its lifetime? You're like, yeah, that would be a big part of it. So anyways. Yeah, and Daniel brings up another point. You'll notice that these guys that so one of the things we do is we analyze professional firms, money managers. We analyze what they do, and I talk about, okay, so a couple of weeks ago we did one on mid-cap stock investors and stuff. So I break it down what they do, but you'll notice there's a trend. These guys almost always have inherited their cushy multi-million-dollar a year job from daddy. Yeah, Radon says there's nothing beats hard work and grinding out, like be a craftsman. In this case, I mean, I totally, absolutely agree. In this case, in the financial markets. Okay? And you'll notice, like in other investment arenas, like let's say a different asset class, like real estate, there are those that do the work, and most do not do the work. Most of them don't do the work. They buy a couple of houses and stuff. And you're like, well, let me see your APOD scorecard. You're like, what? Yeah, your database of the last 1,000 properties you've reviewed. Let's see your database. Oh, well, I don't have any of that. Oh, you didn't do the work. You're out. Okay? Most people fail. Most people are below average. I'm not talking about you. I'm talking about your competitors. Almost everybody is below average. Now, you might laugh and say, well, that's funny. It's not everyone can be below average. No, most people are below average. You'll be at such a higher level than everybody else that if you combined you with them and then divided by the number of inputs, almost everyone is below average. Okay? Because you're on a different plane. Not even playing field. You're on a different level of consciousness. Okay? Followed by a higher degree of work. and energy that you've put into this, that there's almost no comparison. There's like everybody else, now they can create their own average. Like, who cares, right? You could take everyone else and put them over there and say, create your own statistics, normal people. Okay, go ahead and be your below average. And then you could be the average below average. You're like, for people that are below average, I'm at the top tier of above below average people. You're like, okay. Okay. And then there's this other, there's you and the hard-working, intelligent people that put in the blood, sweat, and tears for years, and you've inherited the earth. Okay? So anyways, yeah. So maybe on my book club, we'll read Ray Dalio's book. I think it'll be fun. I like his stuff. I just get all ape crazy when people are like, oh, he's a genius, or like, oh, Elliot Wave's a genius, or this other person. No. Okay? No, they're smart. Okay. Right? Probably the two overused words in the English language, the two most overused words in the English language are genius and love. When you watch The Bachelorette, like, I love you. Dude, you've been on 2 group dates and 1 one-on-one, and you're in love? I don't believe you. Okay. Does anyone know what university I went to? Rev, it's love, don't fight it. There we go. All right, so somebody asked for, what was it? Tony Montana. Somebody, I've already forgotten. Oh, Nat Gas, I think it was. So we'll do commodities. Thank you, Reb. I appreciate that. All right, let's do a couple of things here. Gold is still doing its thing. We finally got our higher high. It's taken 2.5 weeks. Our double bottom, higher high, higher low, higher high. So what we predicted 2.5 weeks ago is it would make one more higher high and then retrace. Here's Stanford with an H. Stanford's nice. When I was a young entrepreneur, one of the things I used to do is go to their engineering school. Actually had a good series on venture capitalists. And so you'd go and you'd be in like the Intel building or something at Stanford University in the engineering school. And anyways, so you go in and listen to them. You have to understand, back in the day, there were so many startups that I used to know that went on to be huge successes, and then some that got gobbled up along the way. But there was a guy creating a job board for Stanford students, and I created a partnership with him for something I was doing. And even I used to hang out with people that created Facebook before Facebook. So when they're like, oh my God, Zuckerberg, he invented social social networking and he invented Facebook. He changed. There was stuff like that going on before Zuckerberg. Zuckerberg just got someone else's idea and said, well, I'll apply it to Harvard and I'll see if I can meet some chicks or whatever his role was. In Kirkland House, by the way. So when I stayed at Kirkland House, Zuckerberg's dorm room was just the next hall. Like there's in each wing, there's multiple halls. So he was in the hall next to the one I was in. But anyways, there were lots of versions of Facebook well before Zuckerberg got the idea, and some of those guys I knew, which was pretty interesting. But that was happening in the Silicon Valley, and Stanford was a big part of that. So it's a good school for sure. Stanford Business School is good. Stanford Medical School is good. You know, the engineering school is good. But Harvard's pretty good too. Do they rent his room? That's funny. I sent a text. So when I stayed there, what was it, 2 years ago? I sent a text one time because I was in the courtyard, and I was reading before class because you're constantly reading. So you're up late reading, and then you have to wake yourself up early and read, and sometimes do a webinar. So anyways, I was in the courtyard, and I'm sitting in an Adirondack chair, sitting by a tree, and listening to the birds sing, and reading, and then I kind of look up. I'm like, oh yeah, that's his room. That's the room Zuckerberg did Facebook. I was just staring at it, just the way I was sitting. So I took a picture and I sent it to my kids. I'm like, look, there's where Facebook was born. Oh, the Vossel, what the Vasselhoff, whatever those guys are. Yeah, they're Harvard guys too. Yeah. Vossel, the twins. Vosselwink? Yeah. Nelson Nash? No, there's a few famous Nashes, but becoming your own bank? No. All right, so anyways, gold is kind of doing its thing. We'll look at oil and then nat gas, because I was specifically asked to cover nat gas, so I'm happy to do that. Here's our Brent. If you recall, we were in this mode, and at that time I said you should be identifying your prices in which you think Brent could change direction, and when you believe it'll change direction, trade the Noki. So this was actually based on Norway. If you got this up, you'd buy Norway. Plan B is if you got this up, you'd buy Norway. And that's why we have the USD Norway this way, because we were set up on this. And so it's just whether you did it or not. It's not brilliant work. It's just whether you did it or not. Okay. So if you are still a bull, and by the way, M2, notice it's at the exact price, and remember I said on these weekly trades, very late in the week or very early in the week, I want to be in the trade. Well, there it is, and here's the target. So now, if you're still a bull and you believe we're going to be here in a week or two, then you need to be in the process of looking to buy, which means you need a trade plan for tomorrow, and you probably should be executing it by now. This is your buy zone if you're a bull. If you're a bear, oh, you sold it 12 hours ago, more than 12 hours ago. Right? That's the exact price. So I'm looking at this from a bullish point of view. If you're a bull, you had to wait all day, but you know this is what you want, somewhere in there. Okay? Where you get confused is you don't know if you're a bull or a bear, and then just forget about it. Stop trading. Just you don't get it. You don't even get the concept. You're not on the clue train. Okay? 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 And then nat gas. We had a question about natty. Okay. And I don't know anything about natty. And there's a gap here. I don't know if that's a legit gap. That's a pretty big gap, though. Let's break this down. I want to look at it on a confluence level. And we're in a take profit zone for nat. We're on an M4 R2 combo. So that's profit taking. I wouldn't be getting in, I'd be getting out. Well, Mahai wants to know, what does it mean when a country makes it to emergent market status? I don't know. Oh, I'd never want to be a broker, A-Rod. Oh my God, that sounds terrible. I'd never want to be a broker. Well, I guess we'll call it a day. It's been a couple of hours. That's a pretty long webinar. We also have Tuesday and Wednesday and Thursday and Friday. They're all scheduled, so you can go to the youtube.com/Forex.Today, and you could set reminders for all of those. And all that kind of stuff. So happy Thanksgiving if you're Canadian. Happy Thanksgiving, eh? And I will see you tomorrow. Have a wonderful time. And make sure you're planning tomorrow's trades right now. You should actually be done planning tomorrow already today. Okay? I want you to be a day or two ahead at all times. Okay? I know if maybe 4 of you take my advice, then that's a huge win. You should be on tomorrow's trades already. Right? Today is too late. So, anyways, peace on earth. May the pips be with you. May your profits be above average. Yeah, I know Maida does. Oh, for sure. And, yeah, see you tomorrow. Thank you for being on my team. Thank you for being part of the Forex.Today YouTube community. And thank you for being a client to Trader's Way.